make money.
Call right now. We'll send you the next full year of Individual Investor, including our Magic 25 updates and now the Clock Radio for the incredible discount price of $22.95.
To get Individual Investor, call now 1-800-298-2200.
Welcome to this edition of Tech Talk with John Murphy. I'm Karen Gibbs, and this is definitely a segment that you don't want to miss because Friday at 5 o'clock, John Murphy called for a breakout in the oil stocks. And John, the XOI, the oil index, rallying 8 points today. Even Joe Kernan noticed that the stocks are moving.
That's a monster move, Karen. It's about 2.5%. Actually, it's just a continuation because we pointed out last Friday that the energy sector had been the best performing sector even the prior week, but it seems to be gathering momentum here. And part of the reason, and a large part of the reason, is strength in the price of oil itself. By the way, I just want to mention that of the 10 top performing stock groups today, the top 4 are all energy related, so oil related, so clearly a lot of buying there. Clearly it has a lot to do with the price of oil itself. But we're going to focus on the one in particular that really has been leading on the upside. We've been talking about heating oil. Let's take a look at it. I mentioned I think it was Friday that heating oil had hit a 2-year high. And as you can see, here's a market that has been moving sideways. And this chart goes back to 1992. This market has been moving sideways since the beginning of 1994. And as you can see, we're having the look of a very nice basing pattern. We've broken out very impressively over the last couple of weeks, and it looks as if we're entering a new uptrend here. At one point, we were up about 140 points today. We hit 58. We gave a lot of it back. We only closed up about 20 points today. It could be that the rally is a little overextended here. In fact, I suspect it is. But as you can see, that the chart, it appears to be that this is more than just a little short-term blip. This could very well be the beginning of a new uptrend. Heating oil, of course, is the dominant market in this complex right now because we're entering the heating season, and of course it's gotten very cold here in the Northeast. That has a lot to do with it. But clearly the rally in heating oil, crude oil, natural gas, all those markets having a very positive effect on the oil stocks themselves.
Okay. Let's switch a little bit to the grain market. It's another seasonal market that we're watching, seasonal terms of heating oil coming into the winter season. Well, Brazil is going into their growing season for soybeans, and it is incredibly dry there with wheat at 15-year highs, corn at 7-year highs, beans scoring new life of contract highs on dry weather conditions and some worries about crop conditions. What's the technical picture look like?
It also looks like it's very close to a major breakout, Karen. We're using longer-term charts today because I think it's important to put these things into perspective. January soybeans closed up, I don't know the exact number, but we closed up about 5 or 6 cents today, something like that. This chart shows the, again, what appears to be basing activity. It shows the high that was set back in 1988, actually above $10. And after that slide, we've been basing actually for about 5 years. Right around 1990 is when that sort of sideways pattern began, and we've been trading between 550 and 750. That certainly has the look of a major base. Now, today we hit 720 at one point in the day, and then we sold off a little bit. From 720 up to about 750, there is some resistance just above the market. 720 was a high that was set earlier in 1994. And the other number 750 was a high that was set in 1993. So we may see a little stalling here, maybe a little backing off. The market may be a teeny bit overbought. It may struggle a bit in the 720 to 750 area, but this has the look of a major base, Karen. If we can close above that 750 level, and I think we will eventually, as you can see, that would put us at a new 5-year high, be a very impressive breakout on the chart. And I think if that happens, traders out in Chicago on LaSalle Street will be talking about double-digit soybeans, maybe.
Beans in the teens again.
Maybe so, Karen. But as you can see, this is a sleeping giant here. These grain markets have been moving sideways for a long time. And I don't even know, it's not even fair to refer to this as just a weather market. And a lot of people are just dismissing it.
It's a demand
This is
market.
something that has been building for 5 years, and there appears to be a lot behind this.
All right. And just for those of you that follow these little pieces of minutia like I do. 1 bushel of beans equals 11 pounds of oil and 48 pounds of meal. And if you've been following the Malaysian palm oil market, there's a shortage there, bullish for oil. Also, Rotterdam meal is very, very strong, and so you get a buildup of demand for soy meal and therefore a demand for the beans to make these little products.
Right, and soybean meal is at a 2-year high as well, Karen.
There you go. Well, one more market that I want to ask you about, and that is the copper market. Been rather sleepy, also awoke today, sharply higher on the day. What's going on with the copper?
It looks like it might be trying to turn higher, Karen, and why I wanted to finish up with this, because this is one of the industrial commodities. They've been kind of lagging behind. In fact, you recall on Friday we looked at the Journal of Commerce Index, and a lot of people look to that as maybe a better sign of inflationary pressures. And of course, we're talking about the copper market and the aluminum market and markets like that. This market has been in a correction since the summer. I still think the longer-term trend is up. I've been viewing this more or less as a correction. You'll notice that March copper recently came down to that 119 level. We have bounced off it very nicely. In fact, we closed up 2 points today, just shy of 123. It's too soon to call that a bottom, I think, although I suspect that's what it is. We would have to get above that 125 level and break that little downtrend line and then get above the 128 level. But at least for the first time in a while, we are seeing some bottom picking in the copper market, which could also be suggesting some strength in these industrial prices. And this has been the weakest sector of the market. But even there, we're beginning to see some signs of strength.
Okay. This may be one of the reasons that the bond market rally is capped a little bit. We have stalled in the March contract. Of course, life of contract highs 121.12. We're trading around the 127 to 12 level today. And the 6% level looks like it's really going to be tough to push through. Do you think traders are starting to look at that newly reconfigured CRB index that was at 5-year highs today?
Well, not just by itself, but I think they may be more concerned about oil. I mean, you know, the oil market is something that everybody watches. And you know, historically, Karen, when oil stocks take over the leadership of the market, that's normally not a good sign for the market in general. And normally that has a negative impact on bonds. So I think a lot of traders, like myself, who were looking for 5 1/4, are maybe now rethinking that a little bit and saying, you know, let's not get greedy. 6% is still pretty good. And so I think you're going to see some profit taking in the bond market around 6%. Even if we get below that level, I think we're going to have a hard time getting below it. So as we said on Friday, I think it's a good time to be taking some profits in the bond market just in case.
All right, John. Thanks very much. Okay. We'll do this again Friday. CNBC's technical analyst, John Murphy. Well, when we come back, we'll take a look at the mood of the market today. Stay with us.
Wall Street, the Dow Jones Industrials up 27.46 at 5184.32. Transports up 9.52 at 2080.76. The utilities up 0.97 at 219.60. Well, the NYSE Composite Index. No, first we look at the S&P 500 Cash Index, which was up 2.05 at 619.53. The Amex Market Value Index was up 0.10 at 535.65. The NASDAQ Composite down 0.92 today at 1061.49. The 30-year Treasury bond up 6 ticks, 111.14. The yield 6.04%. Topping today's business headlines, reports say Microsoft is planning to make a major investment in NBC, a unit of General Electric. Microsoft says it does not plan to comment on the Daily Variety reports, which cite sources saying that it is planning to acquire 49% of NBC for some $4 billion. The Associated Press reports that 2 sources close to the talks are denying that report. New economic forecasts may leave room for compromise on the budget. A new congressional analysis says budget writers can spend an additional $135 billion over the next 7 years. While this may be a step in the right direction, the White House still cautions that major differences remain between Republicans and Democrats.
The Republicans are still deficient, and they are far from having the kind of investment that we need in Medicare, in Medicaid, in education, in the taxes for working families in large measure, because in spite of whatever economic growth there will be, there is still a huge tax cut that we can't afford.
Labor Secretary Robert Reich is cracking down on companies that misuse their employees' 401k investments. Secretary Reich says he's narrowing the time period the companies have to deposit employee contributions into 401k savings plans.
There is absolutely no reason why companies need to sit on 401k contributions as they are right now, many companies, for up to 90 days.
Secretary Reich contends that many employers abuse the grace period, using the money as interest-free short-term loans. Roy Blumberg is down at our Wall Street Bureau. He can wrap up for us exactly what kind of a day it was or wasn't, depending on which index you look at, Roy.
Well, Ted, indeed, you had a very narrow focus to today's rally. Blue chips were very strong. The rest of the market had a very mixed picture. Let's take a look at our technical indicators, show you where we stand. First breath, we had 1,189 stocks advancing and 1,132 declining. Very narrow breath for a Dow up 27 points. This is the kind of breath you would typically get with a Dow up 5 points. And again, the underlying market not as strong as the Dow. This is a negative. As for the volume, 345 million shares. Slightly lower volume than we've been seeing on average of late, but still that volume trend has been very good. This number is still positive today. As for the advanced decline line, well, after 3 months of diverging with the major averages, a couple of weeks ago, the advanced decline line made a new high, reaffirming the uptrend, and it has returned to positive. As for new highs and new lows, same as the advanced decline line, we only had 167 new highs today and 20 new lows, but within the last couple of weeks, the new highs have reaffirmed the uptrend by surpassing their July peak. As for the ARMS index, 10-day moving average of ARMS is at 0.90, essentially in the neutral zone, while the 5-day average at 0.86 was overbought about a week ago. We did get a couple of days of decline after that. As for our trend watch, long-term trend of the market remains up, intermediate-term trend is up, and the short-term trend is up also. Well, Ted, the rally is fairly narrow, but a great deal of this year the rally has been narrow, but it's still to the plus side unless we have some kind of significant disturbance to the basic trend in interest rates and the basic trend of the economy. The best you can look for, I should say, the worst you can look for is maybe a few days of down from time to time with a continuation of this strong uptrend that we've had all year, though not at as rapid a pace. And Ted, I want you to ask Bill Woolman, who I know is coming right up, if those two famous White House economists, Pollyanna and Rosie Scenario, are back at work again. Back to you.
I will do exactly that for you, Roy. Our market analyst, Roy Blumberg, live at our Wall Street Bureau. And Bill Woolman joins us. Amazing that he knew that. Bill, did you hear what he said? You weren't plugged in. He wants to know whether those two famous economists, Rosie Scenario and who was the other one? I forget what the other one was, but he wants to know if they're in play again vis-a-vis the budget. Are things looking better here with the budget?
The answer is, look, the fact of the matter is that things have looked good for a long time with the budget. That's why the bond market's been so strong, one of the reasons, and that's why the stock market's been so strong. And ever since sort of Clinton caved and the Democrats granted there'd be no major new programs, and they're cutting the way the Republicans are cutting, except a little bit less, things have been very good. So what's going on right now is sort of, the tale told by idiots full of sound and fury signifying nothing. The line out of Macbeth. What's going on right now is obviously a ritual dance which has an end. It doesn't matter much when it ends, you know, even if there's a shutdown. The markets are telling us that that we have a deal with which, the financial community is quite satisfied. It would take some sort of a real serious derailment to change anything.
What about the CBO analysis, this extra $135 billion?
Well, that's correct.
Is that a significant amount of money, though?
Well, against the background
in this context?
Sure, against the background of under $500 billion, it's more than chicken feed. It's like 25% of the money they're looking for. The other thing that's really interesting is, that Clinton accepted the principle of a cut in the adjustment for the Social Security tax. So they're coming together in ways other than cutting spending.
Do they come together before Friday?
Oh, I don't know.
Does it matter?
Ted. My own guess is a continuing resolution that goes to December 23rd, okay? Then another one, and then the agreement sort of before Christmas, whereby you can hang the agreement on your Christmas tree and you vote for whoever was on that agreement, okay? But that's my serious bet. Continuing resolution to the 23rd, agreement on the 23rd. If I had to guess, that's what I would guess.
Quickly, I was in several malls this weekend. Looked pretty busy. At least the food courts did. Are people buying things?
Right. Ted, you may be a great mall reporter, but my own experience in the world is you can't tell a damn thing from your trip to the malls.
I use as an indicator.
The numbers tend to suggest that consumer spending is slow. We had some reports today, some fairly serious surveys, and they show that it suggests that things are relatively slow. We'll see Johnson again tomorrow. I think things are relatively slow. It's not a disaster, but it's slow, even if the malls look busy to you or to me.
I use as an indicator how long it takes the modem once I give my American Express card to come back with a return, and someone said, don't, that's just a function of how good your credit is.
And that's not true, Ted.
We'll see you later. Thanks.
It's a function of the improvement in the system is what it is.
Bill Woolman, our chief economist. And it is time now for this afternoon's winners and losers. CNBC's Joe Kernan has that for us. Joseph, how you doing?
Good. How you doing, Ted? Thank you. Oil stocks across the board strong today. Cold weather, it's
so why was up like almost 7 points?
Sometimes it's hard to, whenever we give a cause in effect, it's always tenuous at best because they're the market discounts. That's what we know now. So we shouldn't find out a lot of this stuff right away. But you'd have to figure that this cold weather had something to do with this. I put some representative stocks down. Let's start with Mobil. That stock, big gainer today, up 2 7/8. Exxon up 2 3/8. I put DuPont on there since it's a Dow component, and not everyone remembers the big oil component because of Conoco still. Broderbund, what do you say about this? Up 3 3/8. Microsoft co-founder Paul Allen acquiring a 5% stake, or 1.03 million shares of Broderbund in a filing with the SEC. Allen said he bought it between December 7th and December 8th at prices ranging from about 57 3/4 to 58.5. Allen says he acquired the stake as an investment, which you always say that. And just last week, Broderbund lost out on its bid to acquire learning companies to SoftKey. And we should point out Paul Allen has high-tech investments all over the place. But you're talking 1 million shares at $58 a share, $58 million. Elsewhere, Alcoa is losing 1. DLJ cutting the market perform from buy. Didn't hurt the Dow today, though, obviously. Kellogg down 1 1/8, another widely held stock. Goldman Sachs lowering its rating. Removing from the recommended list, now calling it moderate outperformer. Diana Corp has been up 6 straight days. It's up over 70% in that period. The company last week declined to comment on whether there were any corporate developments. This is a holding company for Entree Food, meat packing, other things. Hogan Systems traded higher earlier, but the stock that's buying Hogan, Continuum, was down hard, or the company that's buying. Let's show Continuum because it's a stock deal, 0.355 shares. You can see what happened to the shares that they're exchanging, so you can see why Hogan pulled back a little. Both those companies produce accounting systems. Hogan focusing on banks, Continuum focusing on insurance. Wabash, down from 40 as far as a 12-month high. Lower than expected fourth quarter net. OEA, better than expected earnings for that maker of airbag products. And Visioneer, a new issue. Robbie Stevens pricing 4 million shares at 12. They develop systems that facilitate imaging and storage of paper-based info on computers based in Palo Alto.
Okay, Joe, thanks very much. Joe Kernan, a look at what went on overseas. When we come back, this is Market Wrap on CNBC.
This portion of our program is sponsored by Oldie, America's full-service discount broker.
Consolidating my discount and full-service accounts at Oldie was simple. Now I receive advice and commissionless trading. With Smart Trading, whenever I purchase 1,000 shares of a stock Oldie recommends, my trade is commission-free, and everyone qualifies. Timely investment ideas with the potential I look for, and commissionless trading. That's why I moved to Oldie.
For commissionless trading and a list of over 200 recommended stocks, call 1-800-USA-OLDIE.
Your enterprise network is...
For Exxon's observation, since we're all in such a good mood today, this also cries out for the last budget that the Democrats presented us. It cries out for them to redo it along these lines and see how far they are off from balance. I would just generally say they'd be a long way from balance.
So, Senator, what's the next step? What happens now?
Oh, next step, tomorrow, 10 o'clock, the entire negotiating team will be briefed by either Dr. June O'Neill or her staff so that we all understand what this means. Overnight, the staffs will be able to look at it in more detail, and then we will attempt to agree after that meeting as to what steps we take next. But let there be no doubt, this has not put us in a position where we are cutting off negotiations. We're optimistic that we ought to get started again and get seriously working at it. What the program or agenda will be, we won't know until tomorrow after we've been briefed.
Senator, in a broad brush way, can you explain? All right,
you've been watching our live Washington coverage of reaction to the new Congressional Budget Office figures concerning the budget deficit and the talks that are going on this week. Among others, you heard from Senator Pete Domenici just a few moments ago and House Budget Chair John Kasich, both of them saying that the new budget figures from the CBO give them more flexibility in the early part of the 7-year balanced budget plan. However, towards the back end of that balanced budget plan, there may be some roadblocks. However, Mr. Domenici just said that it does give room to talk. They are supposed to brief their aides tomorrow morning, 10 a.m. Eastern Time, and the talks are scheduled to continue with a Friday deadline to avert another government shutdown. So a little bit of progress now that we have the new budget figures out. Remains to be seen whether they can move through the impasse, however, on the budget situation. Time now to turn to John Murphy, our technical analyst here at CNBC, and we're going to talk technical at this point. John, if you were watching on Friday on Tech Talk, the energy stocks were the big movers at that point. You predicted that they would continue to do so, and they were leading the market today. So if you were in the energy stocks, you did well. How do they look at this point, John?
Well, they look even better after today. So we had a tremendous run. In fact, the XOI index, which is the American Stock Exchange Oil Index, jumped 2% today to an all-time high. What I'd like to do starting is looking at what the XOI is doing relative to the market, because I think that's really a very key thing. We looked at this chart actually a couple of weeks ago. It was a relative strength chart, and we simply pointed out, we simply take the XOI, which represents oil stocks, and we divide it by the S&P 500. And as you can see on this chart, since April actually of this year, so for the last 8 months or so, the relative strength line has been dropping, simply indicating that the oil stocks were underperforming the broader market. They have been leveling off over the last couple of months, and we looked at this chart a couple of weeks ago, and we simply pointed out that with the breaking of that trend line, it looked like the oil stocks, for the first time in 8 months, were beginning to outperform the broader market. And as you can see that today with the XOI up almost 8 points today, a 2% gain, we're also breaking out, not just in absolute terms, because that was an all-time high for the XOI, but even in relative terms, as you can see that there's a lot of rotation right now going into the oil stocks.
And some of the big leaders in the Dow today, indeed the leaders in the Dow, were the oil stocks. Chevron is one that you want to profile among a number of others. What is it about Chevron that impresses
you? Well, so the international oils is where most of the strength has been. In fact, 6 of them today in the XOI set new highs. We've looked at some of the other ones over the last month or so that have been in new highs, but Chevron actually broke into new highs today for the first time, so that's why we picked that one. We've looked at Texaco in the past and also Exxon. As you can see, with Chevron, we've been basically in a huge trading range since 1993, with today's move up to up 1.5 to about 52 3/4. As you can see, it has broken us decisively above some resistance in the 49 to 50 area. It also took place on very heavy volume. So Chevron is actually playing catch-up with many of the other international oils. A very strong breakout today. And as you mentioned, Sue, the strength in the 3 big oil stocks in the Dow accounted for almost 1/3 of the gains in the Dow today.
Now, a stock that you've been following for us for quite a while here has been Halliburton, one of the oil service stocks. And you've been bullish on it for a bit, John. How does it look now?
It looks even better, Sue. Here's another one. The oil well equipment and service stocks also were among the top performers today. We actually looked at Halliburton on Friday. We took a shorter-term look at it. You can see why it looks so good. The stock has been moving up for the last couple of years. Now, today it closed up a full point. We moved above 47, also on very good volume. This whole sector was quite strong. We've moved decisively above the resistance layer at 44. This is a 4-year high in Halliburton, and it looks as if we could eventually get up toward the old highs up near the 56 to 58 area.
So you would still be willing to go long this stock?
Well, it's not as good a buy as it was a few weeks ago, but I still think this stock looks very good. Schlumberger also touched a 52-week high. Baker Hughes was up a full point, also on the most actives list. So a lot of buying and a lot of volume moving into this sector.
How about the oil and energy sector itself on the raw commodity side, the crude oil market, and especially heating oil you wanted to look at?
Well, I think that's a lot of what's driving this, so we're seeing a lot of strength. The market that is really leading is the heating oil market. We're moving into the winter months. This has become...
No kidding.
That's right.
It was a very cold weekend.
That's right. You've been burning the fireplace, but heating oil has been the dominant market, and as you can see, it has broken out decisively to the upside. In fact, we're trading at a 2-year high. We were up again today, but we're also seeing strength in the other products products as well. Crude has been very strong. Natural gas has been very strong as well. And by the way, of the 10 top performing sectors in the stock market today, the top 4 were oil related, and the 10th best performing stock was natural gas related. So pretty much across the board, very strong performance in the energy stocks.
But this is a sector that the bond traders worry about. When you start seeing this particular sector, not only of the stock market, but then the crude products start to outperform, it brings up inflation fears.
Traditionally, it's a problem, Sue, for the bond market. And I think it's going to make it very difficult for bond yields to stay below 6%. And also, traditionally, when the oil stocks take over the leadership of the market, which seems to have happened over the last week or so, that's normally not a good indication for the overall market. Very often, it does raise some inflationary concerns, very often does cause some profit taking in the market. But the first place we should see that would be in bonds. If we start to get some kind of a negative reaction in bonds, we'll start to get a little bit more worried.
Today, very much caught in a trading range in the bond market anyway, not a lot of reaction.
Well, it's having a very hard time getting under 6%. And I suspect, Sue, that a lot of traders who have made a lot of money in bonds are getting a little itchy here, maybe getting ready to take some profits.
Booking those profits.
I think so.
Thank you, John. John Murphy, CNBC's technical analyst. Terry?
Thanks, Sue. And up next, all the news that broke after the closing bell. And here with a preview is our stocks editor, Joe Kernan. Joe?
Thanks, Terry. It seems like last week I was doing the book-to-bill ratio, but it's been another month. Time is flying by. We'll have that news. It's interesting. Something to stay tuned for. Also, disposable diaper business being sold by one company to another. We'll have that, plus it looks like an energy stock. Contrary to what John was saying, this one looks like it's disappointing. We'll have those stories and more when Market Wrap continues in just a few minutes.